So you're starting in the beginning building business credit in one of two places. You either have no credit established, so there's no report to show, or more than likely, a lot of people end up right here where you have a low score, usually ranging from 27 to 29 with Experian. It's different with all reporting agencies. Your credit recommendation is $1,000. So whenever I see this, a low score in the 20s and a credit recommendation of 1,000, I know this person has no credit score. So we can see here, this is a high risk or medium risk, but pretty close to high risk here. We can see the financial stability risk score, which determines potential bankruptcy, is very high. We can see it's a 4. 5 is the highest you can get. We can see that the reason is that there's just not any commercial accounts reporting. And we can see here that there is no credit reporting. These are UCC filings, which is one stating they have a loan, but you can see there's no trade lines. There's none. There's zeros across the board. There's only one UCC filing showing that this person has one loan. That does not calculate into the score. So here's a person with no trade line. So this is where you start when you build business credit. Is you're usually either starting with no credit profile or you're starting here. What we're going to do is help you fix this. We're going to help you start crafting and creating the credit report that will help you get high limit revolving accounts and will also make you more lendable for loans and credit lines. So the first step is we get an account or more added to your business credit report. So in step 3 of the finance suite, you start getting these vendor accounts that once reported will give you good business credit. Now this is a perfect example of what happens. We see a really high score, very different from a 27, 28, and 29. We see here that the recommendation for credit starts to increase. But here's what's interesting. You can see in the quarterly trends that this person also had a low score of 28. So this person went from no credit reported all the way up to where they are very, very, very quickly. And what's interesting is it only happened because of one account. This is more than likely Uline, a packaging account. So very important to note here that the first report that we saw had no credit reporting, but they still were given a failing score. That's how it works in the commercial world. That's why you're not able to get loans and credit cards and a lot of the money you want to grow your business when you have no business credit, because they give you a failing score even if you have no credit. But you can see here that was turned around quickly, all the way from a low failing score to a highly successful score. This current score is 96 out of 100. 100 is the highest you can get, and it was all accomplished with only one account, a net 30 account, $100 less than $100 spent to get that score. So now we're really starting to design that credit report and score that makes you lendable. Now as we continue on, the next thing we need to do is add more trade lines. And as we add trade lines, and what happens is not only will, and your scores based on how you pay, the credit limit recommendation really starts to climb as you add more trade lines. So as we continue to get you more vendor accounts in step 3 and in step 5, and we add even these small accounts, you can see here, here's just a handful of accounts here, $100 spent, $300 spent, not a lot of money being spent here. We start to see that we go from these net 30 accounts to revolving accounts, and all this is still happening here, coming out of step 3, then we can see that the recommendation of credit really starts to climb. So this is what not only helps you get money and get approved for loans and credit lines, but get approved for the most amount of money. And you can see it just continues. The more trade lines, now we're up to 20,000, because now as we can see here, there's more trade lines being added. The limits start to come up. The amount you're able to spend comes up to 1,800, 4,000, 10,000, etc., etc. And it just continues to climb. You start being recommended for more credit. Now this person has a bad score showing they have some late payments. They're still being recommended for over 40,000. Why? Because look at all these trade lines. You see, a lot of people think that building business credit's how long you've been in business and all these other factors, but it's not. It's a matter of how many trade lines you have. So we come from having no trade lines here and a low score to even getting one and getting a high score, to then the more trade lines you add, the higher the recommendation of credit becomes, because more trade lines are getting established, more trade lines, and again, that recommendation of credit gets higher and higher and higher, so we're all up to 40,000, all the way up to a really established business that has $724,000 of recommended credit. So what does it take to get to this point? Well, let's look at it. It's just a bunch of trade lines. So we can see here that a really well-established business has a lot more trade lines. They start to spend a lot more money, and as a result of that, the recommendation of credit really climbs. So this is where we're taking you. We're taking you all the way from having no score or failing score to getting some initial credit in step 3 that establishes a credit score for you that's good if you paid as agreed and good recommendations of credit. Then as you get more credit, your recommendation of credit continues to climb here up into 15, 20, 30,000. This is what lenders and credit issuers look at when they make lending decisions. And then you really start to get to a point where you're getting approved for more and really even more money. The more trade lines you add, the higher the limits are, the more you're able to actually use that business credit for, and so on and so on. So this is the journey of what your journey can look like as you build your business credit. But don't forget, getting from no credit to getting to a point where you have that good score and start to establish even the first trade is very important, because this score is what's used as you start to come in and get these creditors to approve you for more and more credit, even on the net 30, even the small revolving limits, and that's all what's necessary to propel you up to the $20,000, $40,000 recommendations. And when you can start to getting into high limits, 20, 30, 40, $50,000 limits that you can use to build your business credit. So this is what your business credit building journey will look like, starting in step 1 when you're building that credible foundation, and on to step 3 when you get that initial account and go from failing to successful score, all the way up to establishing high limit revolving accounts where you're able to get 30, 40, $50,000 limit accounts because your recommendation for credit is that high. And then that also starts to propel you to a point and build a credit profile and score and craft a credit profile and score that makes you lendable, which is the basis of getting loans and credit lines as well.